US inflation data for the August, the CPI data is scheduled to be released today as per US timing. So we'll get it midnight today, perhaps at some time. Now, inflationary pressure in the US seems to be gathering steam. US inflation was recorded at 3% in June, rose to 3.2% in July of 2023. The market consensus is that the annual inflation rate in August will be 3.6%, registering a second consecutive month of rising annual inflation. The year-on-year consumer prices have fallen from 9.1% in June of 2022, but are still very, very far away from Fed's inflation target of 2%. Inflation continues to be a cause of worry in the US, rate hikes after rate hikes. Today is going to be that crucial important date on which FOMC and its decision to perhaps pause the rate hike or continue with the rate hike cycle will be decided, Suyash.
It is very crucial, and as you can see in the last two sessions, the global markets themselves have poised. We are not seeing much of a directional movement in global equities. Now, this is on the back because if there is a positive or a negative surprise as far as CPI-based inflation in US is concerned, if there's a negative surprise, maybe FOMC could be forced to raise interest rates because the economic numbers that are coming out from the country show that the macroeconomic output is increasing, the demand is coming back. So given that the economy is also overheating, FOMC can make a case for a rate hike. But as of now, from what I am picking up, Shweta, as far as the inflation, as you rightly mentioned, the inflation numbers are expected to rise for a second consecutive month, expected to come about 3.6%. And if there is any beat, unless there is a beat or a miss on that regard, FOMC should pretty much hold the rates. At least that's what the market's expectations are.
All right. Let's quickly also get in Amit's perspective. Amit, what happens overnight while we sleep? Let's say the numbers do not come in line with the expectation. Are we looking at a direct impact on the US stock markets and perhaps a resultant impact on Indian stock markets tomorrow morning?
So I think the Fed is unlikely to, brush aside any significant increase in the energy cost. The crude prices, everybody knows that has been going up in the past few weeks. But the X, core, which is X energy and X food, that is, I think, is declining at a steady pace, and that is also, expected to again, go down. So I don't think this would really change the outlook for the Fed meeting next week, which is, almost 97-98% that they are going to stay on hold. So I think the outlook for the FOMC meeting, either this meeting or the next meeting, that is not going to change significantly. It could play a role in determining the market confidence on the Fed outlook for the next year, because investors were rather convinced that we'll get a rate cut sometime around in March of next year. But I think now the expectation is that the rate cut would happen sometime in June only. The main reason for that is that the US economic data continues to hold up, especially the consumption activity. As long as those employment conditions are not deteriorating very rapidly and inflation data continues to go down with a slowing trend, it would not go to 2%, but still if it's on a downtrend, which is not too fast, then I think the Fed has all the right settings to go, with the same rate cycle till for next 6 months or so, and then take a call on the rate cuts.
All right. So the call on the rate cuts would be taken with the data that will be emerging this month and perhaps in the next couple of months. Amit Gupta of Fintrekk Capital, thank you very much, sir, for taking time out. Thank you for joining us this afternoon.